The stock market always retraces back to 50% of its last leg. This is not something that happens sometimes. This is a hard and fast rule. And in this video, I'm going to show you how you can use this rule to predict and make money in the stock market. On this daily chart of SPY, I'm going to identify several legs right now. Here we have one leg. Here we have another leg. If we zoom out, the next leg that we have is this one here. So we see that the leg follows one trend, and then when the trend changes, that is the next leg. And then the trend changes again, and that is the next leg. So the current leg that we are in is an uptrend leg. Now that we have a leg defined, let me show you how the 50% rule works. Let us recall that this right here was one leg of the stock market. I'm now going to apply a tool called Fibonacci retracement, which helps to show the 50% rule more clearly. So I'm going to this button here, clicking on this arrow and clicking Fib retracement. Then what I do is click the top of this leg and come down all the way to the bottom of this leg. So we see then from here to here is 100% of the leg. So where is 50%? 50% is this green line right here. We can already see that this 50% area is a major area of resistance. In fact, the stock has tried it 3 times now and has been unable to go beyond it. So now we are hanging around the 50% area, waiting to see what the stock market wants to do. It may either continue lower or pull up higher. But the point is, it really loves to go back to the 50% line. Now let me show you another example, and this one might actually blow your mind. For this example, I want to start at the market crash of 2020. This is when COVID first hit, and the market took a deep dive here. I want to start at the bottom of this leg here, as we saw earlier, and go all the way up here. This is the full length of the leg. Now, I'm going to apply the Fibonacci retracement. So I'm going to go to this tool here, click Fib retracement, start it at the bottom here, and move it all the way up to the top. Now I want you to pay attention to where the market has bounced. Look at this. The market went up here all the way and then started to crash this here, right? And look where it held support. Exactly at the 50% mark. Exactly at the 50% mark. And now we have started this uptrend. So this 50% mark was a huge area of support. The market loves to pull back to the 50% area. Not just loves, always pulls back to the 50% area. By the way, this rule applies on any time frame, but in my opinion, it's best used on the higher time frames like the daily, weekly, and monthly chart. That's because it gives you a nice long-term picture of where the market will be going in the future. Now let's see how we could have used this 50% rule to predict the market crash of 2022. I'm now looking at the weekly chart of the SPY. Same instrument, but now the weekly chart. Let's say that today was January of 2022, and none of this future movement was here. Let's say I had zoomed out and taken note that the market has been in an uptrend for a while, and that it is likely to pull back at some point. And let's say I wanted to know exactly where it was going to pull back. Well, I would apply my Fibonacci retracement. I would go here, click Fib retracement, click at the bottom, set it to the top, and remember this, we're pretending like this is not here. This is not here. So it was just this leg. Let me actually do like this so you can't even see it. And I said, I wonder where it's going to pull back to when it does pull back. And if I had said, I think it's going to at least come to the 50% mark, I would have been right. Look, exactly on the 50% mark. Exactly on the 50% mark. Exactly on the 50% mark. I love this rule. Now let me reiterate why I think this rule, the 50% rule, is best used on the daily and weekly and monthly time frames. The reason is that although we know that the stock at some point will pull back to the 50% line, we don't exactly know when. And that's the key. If we knew when, then everyone would be rich. But the problem is we have to be smart enough to know that I think now it's going to start retracing back to the 50%. And that's harder to do on the lower time frames, like the intraday time frames, because they move so fast, you don't know whether it's going to pull back now or keep going down. However, on the higher time frames like the weekly, the daily, the monthly time frames, it can give you a really good long-term picture of where the stock eventually will be going. So now I'm going to combine two strategies that I've shown you. One is the 15 SMA rule, which I've shown in a past video, link in the description. Another one is the 50% rule, which I'm showing you right now. So let me apply the Fibonacci retracement again on this weekly chart. I'll go to Fib retracement, start at the bottom of the market crash of 2020, go all the way to the top of this leg, and we've already seen that it pulled back to the 50%. Now, you may ask, well, how do I know when to get in when it started to pull back? Well, look at the 15 SMA. This red bar put in a huge down bar on the weekly chart. That was a signal to you that I'm probably heading lower. You may have waited a few weeks for this pullback to see if it was a true reversal of trend. And indeed, it put another red bar in and held lower. Now, if you had played it smart and held, you could have sold in this weekly bar and made profits all the way down to the 50% mark. Now, this is easier said than done because you have to take into account all these pullbacks, whether this is a true reversal of trend. So you have to be smart about it. But the general point stands that the market loves to come back to its 50% marks. Now, let me just close it out with one final example using the monthly chart. So here we have the monthly chart of the SPY. This area right here is the bottom of the COVID crash of 2020. I want to use my Fib retracement. And remember, we've seen this on the weekly chart already, so we shouldn't be surprised to find the results. But I'm going to use this and put it on the top of the trend, which was right here. And we see that it pulled back perfectly to the 50% mark. Now, I want to use my Fib retracement in a different way. I want to use it on this leg here. This leg here. So I'm going to set it at the top of this leg and the bottom of this leg. And look where we are right now. We're right at the 50%. Like I mentioned before, the 50% area is a major area where the stock likes to stop and say, what am I going to do next? Am I going to continue downward further? Or am I going to now go back up? So we have no clue. There's no way to predict that. We have to just watch and see. So I hope you enjoyed this video. Use that 50% mark on the weekly, monthly, daily charts. Use it on the long trends where you know eventually it's going to pull back. It can really be helpful to up your long-term trading strategy. If you like this content, like, share, and subscribe, and I'll see you next time.